Global markets may be heading straight for a major financial showdown, and at the heart of it all is Japan and the United States. Japan's latest move to reduce its holdings of U.S. Treasury bonds has Washington on edge.
And the latest nation to feel the heat is Japan.
Every single day, more than $1 trillion worth of yen exchanges hands.
I feel like the Bank of Japan is more in charge.
The issue? Tariffs, electric vehicles, and a growing divide between two longtime allies. So is Japan really pulling the plug on the dollar? Or is this a bold bargaining move in a much bigger game? On March 1st, 2025, Japan's finance ministry released a carefully worded statement. Given the economic balance, it is in our national interest to diversify our investments. Simple words, but markets heard a thunderclap. Japan is pulling back from U.S. Treasury bonds. The reaction in Washington was swift. The U.S. Treasury Secretary responded with concern, warning Japan against any move that could destabilize the dollar system. A thinly veiled warning to Tokyo. But what's really behind Japan's shift? Japan is one of the largest foreign holders of U.S. debt, hundreds of billions of dollars in treasury bonds. For decades, this bond-buying relationship has helped fund U.S. public spending and supported the dollar's dominance globally. Behind the scenes, Tokyo has reportedly grown frustrated with Washington's trade protectionism, especially new U.S. tariffs targeting Japanese electric vehicles. The message from Tokyo is clear. If you make it harder for us to compete in your market, why should we keep funding your debt? At the center of the tension, the electric vehicle revolution. Japan is a global leader in hybrid and electric car technology, with giants like Toyota, Nissan, and Honda leading the charge. But the U.S. has begun imposing heavy tariffs on these imports, arguing they create unfair competition for American-made EVs. From Tokyo's perspective, that's a slap in the face, especially as Japan continues to help stabilize the dollar by buying U.S. bonds. And now the country is signaling that loyalty has limits. But what would happen if Japan dumps bonds? Could Japan's move really hurt the U.S. economy? If Japan begins offloading even a fraction of its treasury holdings, bond prices could fall and yields could spike, shaking investor confidence in the U.S. dollar. In fact, headlines in the American press are already sounding the alarm. Japan is pulling the dollar mortgage. And there's more. If the dollar's value drops, it could fuel inflation in the U.S., increase borrowing costs, and make it harder for the U.S. to fund its national debt. But make no mistake, this move comes with risk for Japan as well. Selling off U.S. bonds could trigger volatility in currency markets, potentially causing the yen to strengthen, which would hurt Japanese exports. The Bank of Japan has said it's not aiming for a unilateral reserve draining, but it won't stay passive in the face of economic aggression. So is this a new economic era? This isn't just about cars or bonds, it's about a shifting global order. With the U.S. increasingly using tariffs and trade restrictions to protect domestic industries, a policy that has spanned from Trump to Biden, allies like Japan are now reevaluating the cost of their financial support. And the electric vehicle sector, seen as the future of transportation and a pillar of the green economy, is becoming a geopolitical battleground.
Frankly, I'm very concerned about the behavior of the US government with this imposition of taxes on all products in all countries. And I'm concerned because at the heart of it, free trade is being undermined. We must consider what will serve Japan's national interest. We're strongly requesting the US not to apply these 25% tariffs on Japan. There are different options. We have to think about which is the most effective and have all options in mind.
Some analysts say
Japan is home to some of the world's leading car makers, so the impact from these tariffs must be big. But how big?
Yes, well, among all the tariffs that the Trump administration has announced so far, the levies on the auto industry are shaping up to be the biggest concern for Japan. Now, in 2024, Japan exported about $40 billion worth of autos to the U.S. Those 1.33 million passenger cars accounted for almost 30% of all exports to the country.
Asian powers like China and South Korea are closely watching. Even Chinese media outlets are saying Japan is finally standing up to the dollar. Experts are debating whether this could signal a new economic front in Asia. Washington, of course, wants to keep Japan close. It's a key strategic ally. But with U.S. domestic politics and industry lobbies pushing hard to protect American automakers, a rollback seems unlikely. Japan's currency, the yen, has been sliding down over 15% against the U.S. dollar in just 5 years. Low interest rates and cautious interventions have weakened the yen, while the dollar has soared. This has made imports more expensive for Japan, adding to inflation. And that's where Tokyo's recent shift becomes significant. Japan is now intervening more aggressively in currency markets, risking U.S. backlash. The pressure point? U.S. 10-year bond yields hit 4.3% in late 2023. That's huge for Japan, a major bondholder. As U.S. rates climb, Japan's returns shrink, forcing Tokyo to rethink its investment strategy. Japan holds over $1 trillion in U.S. Treasury bonds. Now it's using that as a financial weapon. A small sell-off, about $10 billion, was seen as a test. But if tensions escalate, more could follow. If Japan dumps U.S. bonds, the dollar could drop, U.S. borrowing costs could spike, and inflation could worsen, right as the U.S. tries to cool its economy. On the flip side, if the dollar falls too fast, Japan's exporters who earn in dollars could suffer. But Japan may be thinking, if we're already being locked out of the U.S. market, what do we have to lose? This could be the start of a broader financial standoff. At the heart of the issue is electric vehicles. Japanese giants like Toyota, Honda, and Nissan have invested heavily in next-gen EVs, hydrogen, solid-state batteries, and more. They want market access in the U.S., but Washington is handing incentives to domestic automakers while hitting foreign EVs with high tariffs.
Reaching out to Brian Kingston. He is the president and the chief executive officer for the Canadian Vehicle Manufacturers Association. Brian, thank you for joining us. What will the impact of this decision be on the Canadian industry?
Well, this is deeply concerning. If you look at the Canadian automotive industry, it has developed and been designed on the basis of an integrated North American supply chain. And what I mean by that is that parts and components move back and forth across the border numerous times, and the overwhelming majority of finished vehicles that are built in Canada end up in the United States. So if a tariff is in force of upwards, it sounds as though this tariff is actually going to be applied on top of the existing U.S. tariffs. So you'd be looking at about 27.5% on vehicles and 50% on trucks. It makes it very challenging to send product from Canada into the United States, and that's significant because this industry drives the Canadian economy.
This isn't just economics, it's geopolitical. Japan and the U.S. are military allies, sharing defense strategies in the Indo-Pacific. But financial tension can bleed into political and strategic cooperation. U.S. officials have struck a careful tone, emphasizing dialogue. Behind the scenes, though, there's concern. Japan's bond sales, even if small, send shockwaves through markets and Washington's nerves. If Japan plays the bond card hard, others might follow. China has already reduced its U.S. bond holdings. Russia's gone even further. Now Japan, America's biggest bondholder, is testing the waters. A weakened dollar would shake global trade. Developing countries with fragile currencies like the Turkish lira, Brazilian real, or Indian rupee could see volatility spike. Meanwhile, Europe is watching. EU automakers also face U.S. protectionism, but they don't hold the treasury leverage Japan has. So, is this the beginning of a U.S.-Japan trade war, or just a tactical maneuver by Tokyo? Japan's aim seems clear: reduce dependence on the dollar. At a recent closed-door meeting, Japanese auto industry leaders urged the government to fight back. The government's response? We'll use our financial strength to defend our interests. In the U.S., some lawmakers are already sounding alarms, saying Japan is acting like a rival power. So now all eyes are on the bond market. Will Japan sell more? Will the U.S. compromise? One thing's for sure, the economic relationship between Japan and the U.S. is no longer just about cars. It's about the balance of power in the 21st century global economy. What do you think? Is Japan just bluffing to get a better trade deal? Or is this a turning point in the global economic order? Let us know in the comments, hit like if you learned something new, and don't forget to subscribe for more deep dives into the biggest global shifts.